Hi, welcome to WealthMills Securities Market Brief. It's always a joy for me to come before you to share about market updates. There is a big bull market is going on in Indian markets. Sensex is trading at an all-time high of 45,000 and whereas Nifty is trading at a level of 13,000 around 275 levels. What does it mean? Indian markets on an incredible bull rally. What's causing this kind of ferocious bull market and ferocious rally in stock markets? The foreign portfolio investors were the net buyers last 25 days. Especially in the month of November, foreign portfolio investors bought equities worth around 65,000 crores. This is causing a big bull market in equity markets. That's why predominantly the large cap stocks are witnessing a incredible rally that's causing the indices to stay above all the resistance levels of the market. If we analyze the data, the domestic institutional investors, they were and they have been net sellers all these days. Of course, there is a dichotomy between the foreign portfolio investors and Indian domestic institutional investors. The foreign portfolio investors, as they are in the end of calendar year December, as they come closer to the end of December, all the foreign portfolio investors, they don't want to sit on cash. They want to buy the emerging market equities, especially they want to buy India and China. Sitting cash during these kind of times where the debt instruments, the secured instruments, when they give negative yield, it is dangerous to be on cash. That's why always the money chases the growth. So this money, the long only money, is coming towards emerging market equities. And India, like a market where the commodities at the prices of commodities at all-time low, the demand for the commodities at a lower point of time. Countries like India, where we are the net consumer of commodities, going to benefit with the low commodity prices in the global economy, which gives a greater strength to the Indian companies to produce more margins. This is causing the foreign portfolio investors to chase Indian equities. How many days this chasing of money by the foreign portfolio investors, we need to wait and watch. Normally, typically, the foreign portfolio investors across the globe, they go for year-end vacations in the middle of December. So probably we may have another week at 10 days rally with respect to Indian equity markets fueled by the foreign portfolio investors. But this time, as most of the money managers are working from home, we need to wait and watch because of the pandemic and the news of second wave. People are not ready to go on a holiday. So this year is going to be an exceptional year. We need to wait and watch how things are that's going to pan out in next few days. But Indian markets are at a very strong note. As the pent-up demand rises in Indian markets, there is a renewed exuberance coming from the investors from all the fraternities. It can be the domestic retail, the domestic institutional investors and the foreign portfolio investors. And one of the key reasons for this rally in stock market, recently the Prime Minister of India had a conference meeting with the foreign pension funds across the globe, and he given a roadmap to the foreign portfolio investors how stable is Indian economy with respect to investing in India is concerned, Indian equity is concerned. That has led some kind of clarity with respect to the foreign portfolio investors. Post that meeting only, we are able to see a flux of funds flow that's coming into Indian markets. You need to remember these are the funds of from different territories of the world, from the different financial capitals. Uh, these are the long only pension funds, and also sovereign funds want to invest in Indian equities. So if they allocate just a couple of percentages of their portfolios, Indian market can rise drastically, and that gives a good support zone with respect to the liquidity into the markets are concerned. Normally, a typical fund manager who manages a global fund, they want the number of stock. Sometimes I do face with respect to some stocks, I want liquidity, and I want to get into when the quantum of money is $1,000,000. So I look for the stocks which have a high liquidity. Normally, a typical retail investors, they just buy 1,000 stocks or a 10,000 stock in any kind of equity counter is concerned. It's very easy to enter and exit. For example, if you think about a company buying a lakh of rupee shares, quantity I mean to say, buying a quantity of a few lakhs of shares, that would be difficult, and you need to have a greater liquidity in that counter. Always the foreign investors, they are not compromised, they never compromise with respect to buying a share at a higher price. What they want is, they want to have a substantial amount of quantity of shares in their portfolio. That's why we are witnessing a tremendous rally in markets. November, 65,000 crores of money that came into Indian equities, whereas at the same point of time in March, Indian market witnessed a outflow of 65,000. So it got netted up right now. The foreign institutional investors are always right now back, and they are fueled to time and again. It's proven that foreign institutional investors are time and again, they are the fuel to Indian markets. While coming to the domestic markets right now in India, there is IPO that we kept on get so many calls from different investors about the Burger King IPO. Just to tell about the Burger King IPO, as you all aware, I am not a great fan of any IPOs that comes into the market, because the reason is it doesn't make any difference to our lives just investing in IPO. Just for example, you might think what this guy is talking. If you apply for a 1,000 quantity of any IPO, what you get is, you don't get the 100% of your subscription. Probably you will get 25% of your subscription. Even though the IPO gives 100% return on listing day, it doesn't make any substantial difference, material difference to your portfolio or to your life. If you want to be an investor in IPO, the better way is, you need to be an anchor investor where you can get a substantial amount of quantity into your portfolio, and you can exit post listing. But with respect to Burger King IPO is concerned, I don't think so. I'm not that much excited with respect to the model of business, because there are compelling companies like Westlife, which offers a McDonald's brand in southern parts of India, west and south. That brand gives a much more prominence, and also you need to understand Burger King is just a single branded product. What they offer is that predominantly you don't go to Burger King for a breakfast, or it's a snack kind of profile, food profile, and it's just a single branded item. How many times, of course, India is a youth economy, 60% of the population is less than 30 years, but India is a typical different market. You need to have a product from morning to evening, whereas McDonald's like Westlife, they offer from coffee and breakfast, lunch, and they serve biryani in some McDonald's stores. So they have the product mix which it typically matches with the Indian appetite and the Indian consumer patterns are concerned. That's why recently Kellogg, they launched poha in India. They want to change the food habits, but what they are doing is they are implementing the Indian patterns. So India is a very typical different market with respect to food habits are concerned. Probably the IPO will do because of the exuberance and the liquidity in the market, but as a investment for a long-term perspective, there are some better opportunities to invest in these kind of food chains are concerned in India at present. Probably just for a listing gains you can apply, but for a strategic portfolio point of view, I'm not quite exuberant with respect to the Burger King IPO is concerned. Just think about yourself. If you are an investor, as Peter Lynch, you need to experience the product. First, before investing in a Burger King IPO, you go and taste the Burger King, their product. Just visit the store if you have, and just go and test how the taste. Are you willing to pay, and are you willing to visit the store again? This is the crux of success of any business. If you are convinced with their product, and if you think that you can visit time and again, you just go and invest in that stock, or else just leave it. And there is one more IPO that is around the corner in US market, Airbnb. It's a beautiful business model, as it is derives major amount of revenue from travel industry. This IPO also around the corner in United States market. That is a very interesting IPO to look into the future, to track the stock in the global markets. While coming to the stock specific action is concerned, what are the stocks we can invest at this point of time? Of course, we have been buying for our investors a company by name ABB Power Products. Recently, 3-4 months back, Hitachi have acquired substantial amount of stake in this company. Right now, the company is called as Hitachi Power Products. They are into power infrastructure. Of course, they are in the trial basis to install the infrastructure for the electric cars and electric buses charging infrastructure is concerned. This is a wonderful business model, and also the power infrastructure is going to play a vital role in the days to come. So the stock is available at a compelling valuations. We have been buying for our clients in the range of 900 levels. Of course, the stock is currently trading at between 1280 to 1300 levels. If you are a long-term investors with a vision to have a stock with a high quality MNC company in your portfolio with power infra is concerned, this is a good stock to invest at this level, and next couple of years the stock can give wonderful results to your portfolio. 75% of the stake is held by the promoters, very small quantity available in the free float. So this is a company you can look, and you can keep buying. For some of our portfolios, we bought a decent quantity to our investors. Already the stock is up nearly 30 to 40% on a higher band in last 3 months. We do book some profits once the stock go above 1300, but every dip, this is the stock you can buy, and you can build a portfolio in your portfolio. The current strategy, what we are doing with respect to the different portfolios are concerned with our investors, we are advising the investors wherever there are spikes, unexpected and abnormal spikes in the portfolios, where we have awesome returns, more returns, we are trimming our portfolios. Workout, one of the stock we bought at 300 level, 292, 280 to 300 levels. The stock is currently trading at 450. We are not going to sell the stock in a hurry. We will be booking profits at higher levels. Any dip in workout, because given the kind of when we were buying, I have not spoken about workout in the public domain, because when we were buying at workout at 280 to 300 levels, people were looking at why this fool is buying this workout. But we understand the business model, how the future for this company, and how the valuations are compelling for that stock. Many of our clients' portfolios we bought workout, and that stock is nearly up 50% in our clients' portfolios. So stay in touch with our research team. You can just send a mail, and you can message to me, give a call to our research team. We are more than happy to help you and speak to you, because when these stocks at a early stage, it won't match to all the portfolios and all the customers. That's why we don't discuss these stocks in a public domain in the initial phase, because the risk tolerance levels of every investors are different. That's why we don't discuss in the early stage, and sometimes we may sell, so that might create a disconnect with respect to your investment is concerned. So by current levels, ABB power products, the stock named as Hitachi, but on the stock exchanges you will find the name as ABB power products. And there are many exciting ideas and themes we have been tracking in these markets, which are going to create wealth to our clients. As you all know, Subex, we discussed in the public domain, the stock, when we discussed in August, the stock is trading at 10 rupees. Currently, the stock is trading at 30 rupees. The stock we discussed in this show. And like many stocks, like Aether Industries, many stocks, you go and check what we are recommending and how the prices are behaving currently. This is all with me. Please do take care about your health. This is Kranti signing off. Thank you.